You're listening to the Goldnomics Podcast, with new episodes every month on iTunes, YouTube, and SoundCloud. Subscribe to stay informed. Hello and welcome to episode 8 of the Goldnomics Podcast, where we're looking at global financial markets through the lens of precious metals. And this month we have a special guest. It's silver guru David Morgan. And David is talking to Mark O'Byrne, our Director of Research. David talking to us from his home in US of A. And they're talking about how gold and silver might perform if we see a collapse in the fiat currency. Now, before we go over to David and Mark, I'd just like to remind everybody that you can stay up to date and catch each and every one of our Goldnomics podcasts by subscribing on YouTube, on SoundCloud, and on iTunes. So, David and Mark, take it away.
Welcome to Goldnomics Podcast episode 8. I'm very excited to have a man who I consider a friend of mine at this stage, one of the leading experts on precious metals and indeed silver in the world, Mr. David Morgan, aka the Silver Guru. Hello, David. How are you today?
Mark, I'm well, thank you. And get your throat tuned up there, buddy.
Yeah. I'm drinking my my lemon honey water here, so I'm going to be a little bit more gravelly than you today. But I think that the listeners will understand me. And anyway, they're here to listen to you more than me anyway. So I'll keep my questions and retours short. So yeah, David, as I said, he's one of the leading precious metal experts in the world, leading silver expert in the world. He's basically, speaks at conferences all around the world. He has a very wide following both in social media and in the mainstream media. He's been on all the business media, the CNBCs, the Wall Street journals, and that's because his research is genuinely good. He's a very good analyst. He has his subscribers to the Morgan Report. He very much has their interests at heart in terms of educating them in how to, I suppose, to survive and indeed to do well. He's not a survivalist per se. He's actually about helping people make money in these uncertain economic times, and he's a great analyst of the big picture in terms of the financial and monetary system that we have today, and how, as I said, to come through the uncertain times that we're living through today. So yeah, great to have you on, David, and we won't waste too much time. We're just going to get straight into it today. So I suppose I just want to get into the big picture, your view. We've had a tough few years, a bear market indeed since 2011, 2012. Looks like we're coming out the other side. But just what's your big picture view on gold and silver specifically, and your outlook for gold and silver in 2019 and indeed in the coming years?
Well, fundamentally, Mark, as I think we all know, anyone that's in the sector or studies it, even at a cursory level, is well aware of the debt problem. Globally, U.S., any country you want to name, and it can't be paid back. There will be some type of the used word reset. So right now, in the U.S., things look pretty rosy, and of course, gold and silver are getting hammered to the downside. Yet you've got problems with the Turkish lira, the Argentine peso. You've got problems in Brazil. You've got problems in Iran. You've got problems in lots of countries that are basically called emerging markets that have basically a currency crisis. If you look at Venezuela, I mean, it's really, really upsetting. Yet there seems to be sort of a ho-hum attitude in the West, specifically the U.S. primarily, that, it's business as usual, things are better, and they believe the propaganda from the mainstream financial press that, things are great and only going to be greater, which is basically a false statement. So fundamentally, you would say, geez, gold and silver ought to be, running away at these levels. And of course, if you were in Venezuela or Argentina or Iran or any of those named countries, you would be very, very grateful that you own precious metals. And of course, people say you can't eat gold, which you can. I'm joking. I have to digress. Sorry, Mark, but we have these little gold flakes, and they put them on chicken wings.
Yeah, I know, it's ridiculous.
It's like $1,000. I mean, it's just so ridiculous. But I'll come back. So if you
end of empire, decadence, right there.
Exactly. In the movie, right? Exactly. So we're you'd be very grateful because you would be able to trade gold and silver for food in almost all circumstances. Not every single one. And of course, not a survivalist, but a bit of a prepper. I would say, it makes sense. Look at this hurricane on the East Coast. Again, I digress, but, just makes sense in these times to be prepared. And what does that mean? Well prepared, and that's up to you. It's your level of preparation. But I think you'd be missing the boat if you didn't have some means of an emergency prep. Then that means like food and water type of thing. And then, of course, financially, most people understand it. So I'm going to sum it up. Fundamentally, the metals should be very, very strong, but they're only strong in areas that are having a crisis. So that's the question. Will the Anglo-American Empire's fiat currency have a crisis? And the answer is yes, it will. I don't think there's any way out of it. The hard part is saying when. On the technical side, it's very, very weak, and it's very tough to call bottoms. The bottom I thought was in on the spike low, and I made a trade, and actually the trade's working out, which suggests at this interview, could change tomorrow, that the stocks may be getting some strength here and starting up. And this is normal in a bull phase where the stocks lead the metal itself. It's too early to tell. We could double bottom to the 2015 low, which I said is the low for this season, meaning from the top of 2011. And is that it? And the answer remains to be determined at this point. I really don't know. What I do know is it's extremely undervalued. If you have a professional attitude and are a serious investor, you do not look for the exact bottom and pinpoint the day, minute, and hour and say that's when you buy. You accumulate when no one else wants it, which is now, and you continue to accumulate. That's what you do.
Yeah.
Back to you.
Very good, absolutely. It's very much our worldview as well, and we're not Armageddonists. We don't think we're going to have, the end of the world per se or the zombie apocalypse, but there are very real risks, whether it be, war, terrorism, natural disasters. You mentioned the hurricane now. That's a very large hurricane, and I agree absolutely in terms of just having basic supplies in the house and taking those, basic remedial measures make absolute sense. I think everybody should do it, and gold and silver, having a few gold coins and silver coins and owning some, Krugans or silver eagles or whatever is your preference. That's what that's for. It's a form of insurance. We don't think these things are going to happen, but they tend to happen much more frequently than people think, So, so just in terms of the you mentioned obviously, we don't know the when. We know that the fiat currency monetary system that we have today is increasingly unsafe, and we're beginning to see it now, because before, in the last financial crisis, most of the risk was seen in the stock markets and indeed the bond markets, and now we're seeing it in the actual currencies itself. So, we're going to see the end of this, the fiat currencies, and I mentioned the end of empire there in terms of people eating gold flakes. So, what's your sense of, it's not going to happen obviously in the short term, but you think it's in the next 5, 10, 20 years, basically, do you?
Well, Mark, as you know, and thank you for posting it on your website, I did that interview with RT. It's first TV appearance I've had in a very long time.
Yeah, and I said, excellent, yeah.
Thank you. I don't think we can go another 5 years. So I'm looking for the peak to be somewhere between 2020 and 2022. I know if you go back in other videos, I probably said the peak would be in 2018. I do the best I can. I'm only human. And really, in these distorted markets that are run by quants and algorithms, that are computers trading against other computers, and there's very little real human interaction. There's really no free market per se. It's more difficult. I'm not trying to make that as an excuse, but I'm also pointing out to those critics that think it's easy to sit in my shoes and do my job and try to get it right. What I do know is every fiat currency in history has failed, and this one is failing. It's just not failing nearly as quickly as those countries we already mentioned.
Yeah, absolutely. I think it's just a question of, it's at the periphery now, but at the end of the day, all these fiat currencies are backed by absolutely nothing, and also the end of empire thing is, we featured a chart, and I think you featured the chart quite frequently, basically the end of fiat currencies throughout history, and you can see the various empires are very powerful nations, particularly European nations, in the latter part of the last millennium. So you had the Portuguese, the Spanish, the Dutch, the French, and then of course the British, and basically when their power was beginning to subside, their trust in their currency. Most of them had gold as their currencies. All of them had gold as their currencies, and that's what created trust. But as they over extend themselves and overstretch themselves, they got into difficulty. And I think we're seeing the same thing with the dollar and the question. We're moving to a multipolar world and a multi-currency world, and I think we can all see that. So if you just speak, just your views of how it might come about, I suppose.
That is really a tough one, and I don't think anyone knows. I don't even know if the elites know. I mean, the top...
So many variables.
Yeah, I think there's probably infighting at the highest levels, and that's just, it's an educated guess. But, I mean, it could move into like a cryptocurrency type of situation that's government-backed, or the government says we're only approving these, and they get in the mix. And that type of thing, that's a possibility. There's, of course, a world currency possibility. There is a reset and just reprint the fiat that you have and put a different picture on it with a different, face on the currency. I am a little remiss to say I think we're going to go back to some type of gold, although I've said it in the past, it's certainly a possibility. It's out there. Whether that's the most probable, I'm not certain. I don't think silver will ever be officially in the monetary system, although it would be lovely if it were, but I doubt it. So I don't want to talk too much because it's a bunch of conjecture and what ifs. And really, although I study this heavily, I don't know. I mean, if you go back a decade, the talk was the Amero. Well, you don't even hear about the Amero anymore. You don't hear about this NAFTA union, one currency for Mexico, United States, and Canada. And, if you go back, like I said, about a decade, maybe longer, not everyone, but certain of our ilk were nearly certain that was going to happen, like the European Union with the euro. Yeah. It happened. So this is a dynamic thing. This is something in motion, and it's pretty hard to determine, what's going to happen. I'll just leave it at that.
No, I agree. Yeah, and I think it's both the elites and even the governments, and I think at the official level in terms of the central banks and the Treasury, I'd be amazed if there's a consensus. Whether it be the People's Bank of China or the Federal Reserve, the Bank of England, I think that increasingly there's you can almost see it and sense it, And I mean, recently you talked about the Amero, which is very interesting, and that was a meme that there was going to be this joint currency, and this was going to become the new reserve currency, if you will, and obviously given the scale of financial crisis that happened and people questioned the single currency and how could you suddenly go from a single currency with 15, 20 European countries in this joint monetary authority and then mix that up with the US and the Federal Reserve and ECB, and how would that work? And it was crazy idea to begin with, But I suppose it could only work if you get a massive financial crisis and then these solutions get imposed. So the latest thing from the Amero now, the talk is about the Yuan and potentially a gold-backed Yuan, and there's a lot of talk about that, and I think increasingly people are beginning to question that and say the Chinese are not going to do that right now because it would destroy their economy. They would destroy their already slowing down. Their exports would massively slow down. Their jobs, the economic miracle they've experienced in recent years would disappear, if they had a strong yuan. So they're not going to do it now. The only time they'll do it is in a worst case scenario of a financial crash or indeed a war scenario type of thing. So just talk to us because we've spoken about that yuan gold possibility. Just if you can give us your latest views on that, because I think we all have to be evolving and updating our views on these things as the market developments change and the news cycle changes.
First one to write about the gold back yuan was Michael Rupert, and I subscribed to his work, and I think I was the second to mention it and give him credit. Certainly, it's a possibility. I think the Chinese, they take a long-term view. So the first thing was to be part of the IMF, and now they're in the basket of currencies that will back the SDR, the special drawing rights. If you look at Jim Rickards' work, he thinks that the next step after the next failure will be going to the SDR. The Chinese may do that as the next step. And then after that fails or is not accepted, then you go to the gold-backed yuan. I really don't know, Mark, but certainly we wouldn't rule it out. My take right now, and this is more, and I'm a thinking man, as you well know, you know me, but I also have emotion. My gut feeling is that the Chinese are willing to go step by step by step. So there might be one or two steps, and I'm not certain that they really want to be the reserve currency of the world. Certainly not at this time. Looking out 1 decade, 2 decades, 5 decades, I don't know. Possibly they will. What I know from Austrian economics is that the idea of capitalism has to do very little with money. It has to do with means of production. So those that produce the most goods and services, that produce the most economic activity,
Value, yeah.
The value makers, the wealth builders, those are at the top of the income stream. Those are the people that acquire the most gold. Well, if you look back in brief history, you look at the pound sterling, and the British Empire ruled the world more or less economically, and they faded. And who came to the fore? The United States. And where did the gold go? The United States. Now China's coming to the fore. Where's the gold going? China. It's not too hard to figure out, Mark.
Exactly. Yeah, no, and it confers obviously monetary power, and indeed financial power, and potentially, I don't think they're going to be a superpower because they have huge challenges themselves, but especially demographically, but and even environmentally in terms of their need and their thirst for natural resources, whether it be water and food, just to feed this massive population. So, but I do think, we're moving to a multipolar world, and the US will no longer be the hyperpower, and China will be a very powerful player, and who knows, potentially the most powerful player. That's a possibility in the medium term. So given the very uncertain geopolitical backdrop, and we've only just very much touched on a high level there, we haven't got into the whole Brexit and Trump and just the degree of political uncertainty in the world, and I suppose the tensions with Russia in particular is another huge geopolitical tension that's there that doesn't seem to be going away anytime soon. What is your favorite asset allocation in these uncertain times to weather this, I suppose, this coming fiat monetary storm, if you will?
Well, I think that to be consistent, and I still believe it to the core of my being, you need, precious metals physically. I mean, that's, for many metals investors, it's sufficient just to own gold and silver. And if you can't afford gold, then have some silver. And then, of course, energy is the number one most important commodity on the planet. It really isn't money, it's energy. So I think that there's an opportunity in the energy sector. And I'm not talking just, the new energies like, cobalt, lithium, the battery energies. Silver is very good for battery use, but I won't go there at this moment. And then real things, I think we're shifting back, even though the stock market's very high, the global economy is shifting back from things we want to things we need. I mean, everybody might want a Tesla, but all you need is transportation. So this favors the commodity sector. I mean, if you look at what's going on in the wheat market, which I think you pointed out very recently, food is very important. So I think anything you can get your hands on that are energy related, food related, metals related, core, need, not want, I think you could do well. I mean, real estate, I'm always favorable to it if you buy it correctly, but most people don't understand what investment means, and they overpay for a house or an apartment or a parking lot or whatever, speculating that some fool will pay a much higher price than the very high price that they already paid. What you put out on the Australian market yesterday was one of the best reads I've got off your website, and you always do good work. It's just, I want to tip my hat to you, Mark. And this was not pre-planned. We talk about it ahead of time, but what's going on in Australia is just unbelievable. It's basically a repeat of what took place during the financial crisis of 2008. I mean, these liar loans and just fake, fudge. It's all for greed. It's all for money. It's for flipping. Who gives a damn? As long as I get mine and I'm rich and I can get out of here, who cares? And it's just typical of the end of the age of empire that me and many others talked about in that movie, the Four Horsemen film. And this is just playing out almost exactly how it was forecast to go. And this is just another point that verifies that we are very near the end, meaning that this big lie that you can print wealth is going to end fairly soon, and that the repercussions for those that are unprepared are going to be very, very difficult in a lot of cases.
Yeah, absolutely. The piece yesterday was from Capital and Conflict, and coincidentally enough, I met Bill Bonner yesterday of Agora Publications. He's over in Dublin. Had a hot whiskey with him to try and sort out my throat. I think he had his first hot whiskey ever. But we had a great conversation, great meeting of minds. But the Australian thing is, it's actually, as you said, it's on a par with the US and the subprime. But I think it's actually akin to Ireland and the scale of the bubble down there in terms of the overvaluation of the property markets in Sydney and Melbourne and Perth and all the major cities, and just reckless speculation on the grand scale, reckless lending on the grand scale. And those banks, they're big Australian banks, and I think they're very much like the Irish banks, and I think it's funny, there's so many, they call it a butterfly or a black swan, whatever you want to call it. There's so many of these variables, and we just don't know which one is going to be the trigger for this financial crisis. But the guy who wrote that, I think Nick O'Connor, was suggesting that European banks are now exposed because they've lent to these Australian banks, and UK banks as well, and this is the nature of the daisy chain of all the interconnected banks lending and the whole financial system, and the potential for contagion that it creates. So just on the asset allocation, I think you're quite strong. You tell people like ourselves that you don't over allocate, you don't put all your money into precious metals. But right now, I think would you be around the 20% mark in terms of an allocation to actual physical bullion?
Yeah, you hit a nerve there somewhat with the asset allocation. I mean, basically, I get these trolls like everybody, and I follow your work, and silver hasn't done anything. Well, if you follow my work, I mean, the first thing I did for the public was the 10 rules of silver investing. The 10th rule is number one, the most important rule, which means I said too much of a good thing is too much of a good thing. For most people, 10% allocation is enough. And then I moved that up to 20%. So on the person, I look at 20% as your total precious metals. So I do how to use the Morgan report when you become a paid member. And I go through different scenarios based on age, risk tolerance, what your goals are, that type of thing. So I'd say 20% total. So let's just say the average person would be about 50-50 mix, which would mean 10% in physical and 10% in well-chosen, cash-rich, unhedged mining companies that make money, make a profit, and basically go up every year. I mean, if you look at our top tier mark, if you look at when I started the Morgan report, I mean, some of these things are still up, 800%, 700%, 600%. How did I do that? Because I knew in the long term, these companies would grow and they would grow their profits and their bottom line. So for an example, Pan American Silver, I mean, I don't know what it yields, like 1%, but it's up like 800% from where we told you to buy it. So your yield on that stock's probably around 8% if you bought and hold it like I did. So, not to just, I wanted people to get the right picture, but the point being is you need it. But too much is too much. You need, where else do you go? Already talked about energy, food, that type of thing. So balance your portfolio, and now I've got people that are more or less all in, but I've never told them to do that. I've never told anyone to do that.
Yeah. No, that's a lot of our clients will be all in. I mean, they fundamentally believe the whole system is unstable, and the precious metals, gold and silver bullion in particular, are going to massively outperform other assets, and therefore they're hugely overweight, nearly too overweight, But and we do caution them, and it creates risks in itself because we don't know the when. We're all very, very confident, I think rightly so, that the prices, not the prices of the precious metals going higher, but that the fiat currencies are going to go lower versus the precious metals again. So I think 20% is a good, healthy allocation to the precious metal sector, and I think our minimum is the 10% into physical bullion, and I think 20, 25, maybe even 30% if you're putting a little bit into platinum and palladium, and so I think you could easily do 10% gold.
I'll just interject, Mark, that I did this interview, and I just really would like some help on it for people that view my YouTube channel. But I interviewed Jeff Christian. I talked to Nick Bereshef.
I saw the interview with Nick. It was very good, yeah. Just on the asset allocation piece in particular was very good, yeah.
Right.
And just the nonsense of so-called balanced portfolios, it's 50% bonds, 50% stocks in this day and age with the risks that are there today is risky in the extreme. But sorry, I interrupt.
Well, the point is that even Jeff says about 25% is the correct allocation. And Nick, I forget his number, but it's close. So both of them are actually higher than me. And even though there's some, let's say, personality people out there that don't really pay attention to the principles. We take the principles of Jeff Christian, like him or dislike him personally. I mean, the guy's spot on as far as what the proper allocation of gold is. It's only 5%, higher than what I just said.
Yeah. Totally. I met Jeff for the first time in Shanghai at the gold conference there last year, and I was pleasantly surprised. You know, I think some people in the industry had demonized him because he was the voice of the cartel, and there's a cartel, and we're going to get into the conspiracy side of it. But he was very astute on many things, and especially on the asset allocation, and so you have to be fair to people, you know, and not demonize people and you troll, like there's plenty of trolls around. So just in terms of, you know, we're saying, right, get your allocation will be 20%, 25%, whatever it is. We're saying you need to dollar cost average or geometrically cost average. I think you need to get that initial position because it's a form of insurance. So potentially you put 50% in and then you buy the other 50% over a period of months. So that's on the buy side. A big question that people have, and it's rarely addressed, is on the exit, you know, and, you know, we're saying there's going to be a crisis. So obviously the exit is you start selling when you have the crisis, you start, you know, and these things have outperformed, then you rebalance. But yeah, just talk to us roughly about that, because a lot of people, you know, they're looking solely at this price I'm going to sell, which is just a crazy notion, you know. So give us your views on that.
This is a shameless plug. Mark did not know this would happen. He gave me the question ahead of time, and I thought about it. But this is the last book so far that I or my staff has written. It's called Second Chance: How to Make and Keep Big Money from the Coming Gold and Silver Shockwave. There are about 7 or 8 techniques in this book that will help you exit the market. It isn't a one-size-fits-all. I mean, if you've got a $20 bill in the silver market, if you bought 1 round or 2 rounds for 20 U.S. equivalent, wouldn't you spend another 20 to learn everything in this book? By the way, there's 6 stock picks in here. One of them has been really a rocket ship. It's actually been renamed. But anyway, there's a lot of information. So the main thing is to not do a round trip. A round trip is where you buy gold at today at 11, whatever it is, say 1,200 roughly, and it goes up to, say, 5,000, and then comes all the way back to 1,200, and people ride it all the way up and all the way down. That is not the purpose of protecting your wealth. You've got to look at when it is overvalued. I think the easiest way to see it overvalued isn't the paper price, it's to value it in other commodities. So if you look at an ounce of gold in terms of the Dow Jones Industrial Average, you look at the ounce of gold relative to the housing prices, you look at gold relative to, you know, a hamburger, you look at it relative to other tangible things, that will give you a good feel for when it's overvalued. And it'll be overvalued, and in my view, very extremely overvalued. That extremely overvalued portion is obviously when everyone would like to at least cash in part of their holdings, and it's very difficult to time, but nonetheless, you can sell on the way up, which is, you know, most of the techniques in this book. You have a set point, and you sell part, and then if it hits the next point, you have it. And then we even have a technique in here that if you sell everything or nearly everything and the market keeps going, we have what we call the sacrifice fly, which is a very risky but very rewarding technique where you can try to get that last oomph of the market. And we do it in a way that you're not going to risk very much.
Involving stop losses, is it?
Well, it's an option strategy. So you're only at risk for what the option is going to cost you. And it's basically, as I said, kind of the last part of the parabolic curve that you're trying to catch and profit from it.
Yeah, very good. It makes sense if you can do it in a low risk way, because a lot of people try and do obviously with futures market, and I have people said to me, oh, spread betting and CFDs, and it's really, I mean, with silver is, when people exaggerate silver's volatility, but it is quite volatile, and it's nearly double the volatility of gold, which is a low volatility asset. So yeah, you don't want to be an option strategy, I think, is the way to do it. I'm going to have to buy your book, David. We're both shamelessly plugging the book now, so just on I was going to say one other thing on that in terms of the exit. Yeah, so yeah, Manu, I agree, and I think you should always keep a core position in actual physical bullion coins and bars that you've taken delivery of, and potentially you don't sell that because you might get a false signal whereby we think the crisis is over, we think the price has peaked, and then the crisis gets worse. And I think if you look at people in Venezuela, and indeed in Argentina and in Syria and all these Turkey is beginning to happen now, and potentially South Africa. I think these people, they're very glad they have it, and silver and gold are financial insurance that you'll use to buy these other assets. They're not really an investment per se. So a portion, I think, is investment, as you're saying, and then a portion is insurance. And if you do it that way, you're not going to try and time it perfectly and make a fortune and potentially lose your shirt trying to do that. You do realize the insurance component. So we mentioned, or you mentioned before, the difficulty in terms of no one can predict these markets at the best of times because there's so many variables, so many actors, and so much liquidity sloshing around the system today. And you also mentioned the algorithms and the machines and how all these markets are manipulated to an extent. And quantitative easing, by its very nature, is central banks printing money to buy bonds and artificially suppress the bond yields and keep the bond prices high. So there's been a lot of speculation about manipulation of precious metals markets. Tends to be dismissed, but our friends in GATA, Bill Murphy and Chris Powell, have done an excellent job in terms of amassing a lot of documentation to back up their case. And indeed, they have the admissions of the central bankers themselves. They've actually said, yes, we manipulate markets, So if you can just talk to us briefly about precious metals manipulation, true or false?
That's true. This is the second book I wrote with Chris Marchese's help, Silver Manifesto. And so, excuse me, folks, looking at the screen, I'm going to read a little bit here. But this is page 114. Fractional reserve bullion banks create silver and or gold out of thin air when they make precious metals loans. Using gold as an example again, the price of gold is determined by the supply and demand for gold. Since fractional reserve bullion banks increase the supply of gold, they influence the price of gold. And then we go through the graphics. And then I just want to, the manipulation. I mean, sometimes I wish I was called into court for proving whether or not these markets are manipulated or not. So this is, written in a way that most people could understand it. I think anyone could, but I go into like the final nail in the coffin that this is absolutely 100% certain manipulated market. So talk about the Sharpe ratio. You can look it up on the internet if you're not familiar with it. The Sharpe ratio equals the average return divided by the standard deviation of return. A high Sharpe ratio means that the average return is high given the level of risk. Frauds and manipulations have high Sharpe ratios. For instance, the Bernie Madoff Sharpe ratio was 133%, while his benchmark ratio was only 19%. The table below shows gold's overnight and intraday Sharpe ratio over different time periods. 1968 to 2014, 72%, 1970s, 92%, 2000s, 167%.
End of. Case closed.
Okay.
Yeah, I mean, there's so many people who have done the research, respected independent people.
Yeah, I pulled this out. I was a little late to the interview because I'm in my library behind me, and that's just part of it.
Very
put downstairs, but this one was given to me by Dimitri, and it's
Dimitri in Munich. Yeah,
absolutely. And this is one. I mean, if you really want to get into this, read this book. I mean, I just told you to read my book, and you can, and I wish you would. But if you really want to get into it, Dimitri Specht did such a great job, and such a great man and very humble. And we're sitting at dinner after one of the conferences, and he's sitting next to me, and he just quietly talks to me and reaches in his briefcase or his bag and just signs it and hands it to me. And it was a kind of a touching moment to me. And when someone writes a book, it's not like their life's work, but if you have never been an author and you write something that's 200 or 300 pages, it's an effort. I mean, there's a lot of time and energy and emotion and everything else that goes into it, especially a nonfiction book or fiction. I have never been a fiction writer, but Anyway, enough said about books, but that is one of the best if you really want to understand what's going on. And of course, most people just blow it off to, well, it's manipulated. I'm not going to touch the market because, it's going to be manipulated forever. And because it is, I don't touch it, which is, I think, a lazy man's attitude. You really have to look at what's happened to all manipulations throughout history. And they all end. And so if you're on the correct side at the correct time or nearly, or maybe even early, maybe you bought that, there's people out there, $30 silver. I know it. I bought some at 30, not much, thank goodness. But, it leveled around the $30 level for about a year after it peaked at 50. Excuse me.
Plenty of times to exit, yeah.
I thought, maybe, just maybe it's going to be able to build a base here. And of course, I had a big sell at 26. I told everybody that subscribed, that paid me for my advice, get out at 26 for hedge heavily. It's going to break it. It tested it 3 times. And the 4th time it went down, and we've never looked back. It's been under 26 since that day. And I'll tell you, I had phone calls from hedge fund managers that were extremely happy that I made that call because they were probably overweighted in the sector. And I didn't want to make that call, but I had to. It was my duty. I call them as I see them. I don't say it's a one-way street, always going up. Certainly I've been wrong as far as the extent of the length of this bear market. I expected it to be 2-3 years, maybe 4 at the most. I also, talking about how wrong I can be, thought the rebuild we saw in 2016 was it. I thought, okay, we're on our way. I expected a correction into the end of 2016. I called that one of my better calls was that whole year. And in 2017, I fully expected January 2017 that we would see a higher high in both metals during 2017, and I was wrong. This year, again, I thought we would start to see the base build off, and we start to come up, and we've had obviously a rather poor year. Does that mean you don't own metal? No. Does that mean it isn't a hedge? No. Does that mean that everything's correct in the markets? No. What it means is the markets are doing what they're doing for whatever reason. And the fundamental fact is that if you don't own them, now's an excellent time to start to get into the market.
Yep, absolutely. And on that, in terms of getting into physical bullion, and just for purposes of disclosure here, full disclosure, we have a long relationship with David, known him a long time, email dialogue, numerous phone calls, and we've met in conferences in Munich 2 or 3 years ago, and again in Dublin more recently. This was last year. So and we have a referral relationship whereby David refers clients to us who are looking for physical bullion in international locations. So it's mostly US and Canadian clients, but anyone who's looking to store gold in a very secure manner internationally. And so yeah, if you can just talk to us briefly, and I mean you're quite good on that as well in terms of how do you recommend people to own physical bullion?
Well, it depends on the person, obviously, and whenever I get a consultation call, it's looking for the client's best interest. There are some people that have a high enough net worth that I think it's worth allocating metals in different jurisdictions. And I own metal with you, as you know, and I think it's one of the safest, easiest accounts to set up. And like any of them, there's a storage fee involved, but I'm willing to pay it. And I don't shop storage fees too much. I think people that do are missing the boat. You want security is what you want. I mean, this is sort of your lifeline. So depending on the person, and most people, buy it, hold it, keep it in their home, keep it hidden. I mean, that's probably sufficient for a lot of people. But then there are other people that if they have enough involved in this sector, I think you definitely allocate some outside of your main jurisdiction. And that's where GoldCore comes in for my client base. I mean, I have clients worldwide, but like one reader in Japan, it's not like I've got 100 readers in Japan, but mostly it's US and Canada primarily, but it's Australia and other countries. But there's always a question for people that want to store outside their jurisdictions, and it's one that I'm happy to recommend. I use almost anything I recommend. I mean, like the Morgan report, well, what do you invest in? Well, buy the report. I mean, that's what I invest in. I'm showing it to you. When do you get in and out? Well, buy the report. I time it. I show you when, that type of thing. But yeah, it's a good relationship, Mark. And it's something, again, not for everyone, but for people that need to allocate outside their jurisdiction. And the other thing is, I'll just mention this briefly, is I did have an account, as you know, and we want to keep it kind of private, but basically everybody in the status that I have was asked to leave, and I had a relationship with them for over 30 years, and it didn't matter, And so then that's kind of when I think we spoke in Munich briefly, and you said it's really not that hard. And I said, great, and we got started.
And that was because of FACTA, was it? Was it the new U.S. legislation? Yeah. Yeah, we got a lot of clients from that, and particularly clients who were storing in Zurich. And at the time, we had just opened up Brinks in Singapore, and we saw very significant flows from it, So it's crazy legislation, but we won't cover that one today and the ramifications of it. But I appreciate you saying all that. And I mean, I'll briefly do our plug. We very much specialize in allocated and segregated, so people have individual legal title to individual coins and bars in their name, in sub-accounts. They have a direct relationship, a direct access to their physical gold, and they can take delivery of it any time. They can visit it, they can inspect it, they can have it moved wherever they want. So that ensures competitive pricing and liquidity, which we think is absolutely fundamental, And we're very excited by direct access gold. We're actually launching now in the next week or 2 weeks, which we think is a new evolution in terms of becoming even more secure, and the contingency, that's easy for you to say, contingency agreement that we will have between ourselves, the client, and indeed the vault provider. So, okay, just the big question. It's something that we've talked about for years, and I think you've talked about and written about it as well, is the debt jubilee. And I saw Michael Hudson on Max Kaiser the other day, and he's written a book about it, about looking at the history of debt jubilees and the potential that this could be part of the, I suppose, a solution to the present financial ills and challenges that we face today. I'd just like to get your view on that.
Well, I've watched Michael Hudson's interviews, not all of them, but quite a few. I'm pretty familiar with them. And I didn't see that interview. I wish I had before this interview. But, there was, I forget who, and I love to give credit to others because, a lot of people, well, you said, and sometimes it's referring to someone else that I studied. But regardless, we're in a situation where I remember someone of distinction, like a Bill Bonner type, said that there would be a debt jubilee, that basically the United States debt would be forgiven. And whether or not this takes place or not remains to be determined. But what I do know is that the requirement to get a handle on this debt is an absolute must. And how it's achieved and how it's done the least amount of damage to everyone globally, I don't really know. What I do know is that the worst, most unsafe asset allocation you can have is any kind of government debt, because they're all broke. So you're actually lending your money for a time factor of either a T-bill for just a few months or to a note for 10 years or to the bond for 30 years on something that's guaranteed to fail at some point. So that's a very high risk. Yet on the other end of the scale, if you're holding up the justice scale and you got gold on one side and bonds on the other, the safest place is an asset like gold that's been money for thousands of years and has never failed. Yet the big rush is to the bond market and everyone's giving up on gold, which, as I said in an earlier interview I did yesterday, that when markets get to extremes, you need to rebalance. This is when you need to, as we said earlier, when gold will get overvalued. That's when you need to rebalance. But right now, I don't have much comment on it. If you want to add on to it, Mark, I think debt forgiveness, a restructuring, a new start. I mean, one that's really kind of non sequitur. It's a situation that's really bizarre, but I did mention it at the interview I had with John B. Wells and Caravan to Midnight, which is a little more, let's say, less mainstream. And of course, you and I are outside the mainstream, but people kind of anticipate what we'll say. Take an extreme. I mean, what if the Federal Reserve was abandoned and the president that did it didn't get shot, and that the printing of the United States currency went over to the U.S. Treasury like it is in the Constitution, and that the United States could print debt-free money? Think of the effect that that might have on a global economy. Wow, that's something. And is that going to happen? I'm not saying that's going to happen. I'm just doing a thought experiment here. But, it's just answering the question of a debt jubilee. I mean, it really would be interesting, if you think about it, to get rid of a banking cartel that basically holds power over the entire globe and get rid of these people. Now, that's pretty difficult. Anyone that's tried throughout history has ended up underground. But it doesn't mean it couldn't take place. So we'll have to wait and see, Mark. Why don't you add on to it? Because you watched the interview. You might want to add to that.
Yeah, well, I was fascinated interview. I mean, that's something I studied Greek and Roman civilization and history and debt jubilees of happened trade history, particularly, not more recently, obviously, but they have done in ancient times, and the most recent version is obviously Germany after World War II, where all the debts were totally forgiven, and they would not have had the German economic miracle without that. So that's the only sort of modern version that we have, and I think there's a lesson there for us all. If we don't want to get into these, the degree of risk that we have geopolitically between particularly the US and the UK and Russia is the highest it's ever been, and higher than the Cold War. So if we don't want to get into a World War scenario, I think this is potentially it's a solution both to the geopolitical risk, but also to the economic and financial risk. But obviously the creditors are way too powerful. The banks are way too powerful, and so it's not going to happen in the short term. There's talk now Jamie Dimon's going to run for president and take on Trump. So the cartel. Yeah. So I
did want to add on to that. You're getting my emotion going, because I did think about the question and I forgot my big answer. And that goes back to Michael Rupert. I mean, he said, if we do not change the way money works, we haven't changed anything. So think about the reset. If whatever it is, debt jubilee or whatever, the bankers stay in charge, we really haven't changed anything.
Just rearranging the chairs, the deck chairs on the Titanic.
So this is a real key issue. Is can people determine their own future through a monetary system or some type of mechanism, be it a really true free market crypto? I mean, is that the answer? I don't know. Or a gold or silver backed crypto. But basically, if we rearrange everything and the bankers stay in charge, we haven't changed the way money works. And that's the key issue. As I just said, going back to, the Treasury taking over, if it's run as it was intended, it's, government of the people, for the people, and by the people. And that would mean the Treasury of the United States ran the printing press. I still am not that favorable to it, but I am favorable to getting rid of the power elites of the banking cartel. The only reason I'm not that favorable to a country-run printing press is that it gets abused similarly to what happens in a privately run one. At least that's what history shows. Could it be different this time? Certainly, I'm open-minded enough to say it could. Will this happen? I doubt it, and I'm uneasy, Mark, about the reset as far as the structure changing, as far as the way money works. And again,
I agree. Yeah.
We're, things will look good, and everything's wonderful, but they're still in charge. And if they're still in charge, you don't want anyone in charge of something as valuable as your own labor, your own free will, your own ability to think, do, and say what you want, your ability to move about freely, all those things. And the way it's going, as we all know, anyone that's even not interested in economics at all, but the social justice warriors and all these factions that are basically seeking for an answer and understanding globally, no matter what side of the political spectrum they're on, that something's drastically wrong and needs to be changed. And what needs to be changed is the truth. I mean, what made America great was that we stood up and told the truth to each other. That's what makes any human interaction great, is absolute, total communication, where we have all the cards on the table and we tell the truth to each other, look each other in the eye, and we do what we say we're going to do. That's what makes things great. It isn't any of this other stuff. It's very simple. I know I said something similar on that RT interview, but it's basics. And naming and shaming and blaming others is an absolute immature adolescent's attitude in my strong view. I mean, if Trump did it or Clinton did it or whatever, certainly there's imperfections in every human being. But to sit there and blame your problems on some political entity is really an immature attitude, because you have a lot more control in your life than you think. And part of it has to do with your thinking. Get out of this box that you are in, that you don't even realize that you are in, where you can't think outside of that box. I mean, I've been outside the box for a long time, probably started when I was 11 years old. And it's a great place to live, because when you're inside that box, all you're taught to do is sit there, name, shame, and blame others for everything that went wrong in my life. Sorry for the rant, but that's how I see it.
Yeah. Well, there's a lot of justifying and blaming going on in the world, that's for sure. And I think I really enjoyed that interview, actually, and we shared it as you said, because a lot of people in our sector are dismissed as, we're selling gold, we're using fear to sell gold, it's all doom and gloom. And actually, when you speak to most of the people in the sector, most of them are very optimistic about the future. They just know that we have these massive financial and economic challenges, and some of them are even aware that there's huge environmental challenges. But I think behind it all is just a lack of morality, particularly at the highest levels of society, and a lack of spirituality. And that's what was wonderful in that interview, that you really spoke about, that you are positive for the future. You're very worried in the short term, obviously, about these significant financial risks, but you do think we're going to come out the other side, particularly if individuals focus on themselves. And we have huge amount of power ourselves, as individuals, and we need to be, rather than get into this left, right, red, blue, Trump, Clinton, all that nonsense. You're like hamsters on a wheel, around and around. Let's just take responsibility and take the power back ourselves. We have that power in terms of us as individuals, families, our companies, our neighborhoods, our towns, cities, and then on the nation state side. But what we do is we give up power, and it goes back to your previous thing about the rearranging the deck chairs with the IMF and the World Bank, and we get this new special drawing right that's allegedly backed by gold. Crazy nonsense. That's not going to sort things out. That's why we do need a debt jubilee. But people need to inform themselves about these risks and about these challenges and about what's really going on financially and monetarily, and then they can take the power back slowly but surely. And actually, owning gold and silver is one small way of doing it, obviously.
Sure. It's a bridge to the other side, and basically it gives you responsibility, because if you have let's say a windfall, relatively speaking, let's just say they're repriced to the real physical economy, which is the way I look at it, you've got kind of a responsibility. I mean, if you're just sitting there and looking for your next yacht, your next, fleet of cars or whatever, fine. I mean,
next iPhone, big news, life vlogs, all over the world about the iPhone.
A lot of your clients, a lot of mine are looking, what's the world look like when we start to rebuild it? And a lot of these people have very great minds and hearts, and they're looking to make it a better place, and this is where the opportunity lies. And you get rid of a lot of interference, and you get rid of, let's say, the noise that you talked about, the hamster wheel, and you really sit down and quietly discuss, we own the future. What's it going to look like? And this is where the opportunity is. And I think there is a huge ability. And of course, it falls mostly on the millennials because of their age. And they've already made a huge shift in their thinking, generally speaking, and speaking in general terms. There's exceptions to everything, but they look more for experience than things. I mean, my generation at that age was, how much can you collect? How much stuff can you get? That makes your life happy. The millennials are looking more for experience.
Our generation as well, yeah. That continued for a long time. So it's good that shift is happening. Yeah. Sorry, go on.
But the ultimate experience is rebuilding the future for the benefit of, let's say, everybody, where you really do have community. I mean, the Declaration of Independence, I believe, provide for the common welfare. That doesn't mean a welfare state, and that doesn't mean that everybody gets to kick back and the state takes care of you. It's basically we take care of each other, and we pretty much do it on a individual basis. I mean, before the welfare state, it was the churches and individuals that took care of the poor and the needy. And there wasn't really as much of it percentage-wise as there is now, because, of course, the base of what the normal status was or income was is improved, because it's human nature to make things better for each other. Anyway, I digressed a bit, but honestly, it could be bad, it could be good, it could be both. I think it's both. There's going to be real hardship trials that will take place during this transition, but yet that's where the opportunity lies. And it's not like it hasn't happened before. I mean, if you watch that movie I keep referring to, the Four Horsemen film, this goes on again and again and again. It's a cycle. It's just that we're more aware. We have the internet. We have rapid communications. I can talk to somebody in Ireland and have a one-on-one discussion with them that people get to view around the world. This is something that's new to us, at least in this time frame. And this is what gives people the idea that, like, this is the only time it's happened. No, it's happened before, and people got through it. It's going to happen again, and people will get through it.
Exactly. History repeats, not exactly, but it certainly rhymes continuously. So we're going to see the same thing again. And I think you're right that some form of spiritual awakening is going to have to be part of the solution. Otherwise, we won't have a solution, you know. So very good. It's been fascinating as ever. Always a great conversation, and really appreciate taking the time to come on with us. So just for the people who want to find you, it's themorganreport.com, isn't it?
Correct. Yeah, just start there, and from that point, we'll get them on our mailing list, and we'll give you, the Twitter feed, the YouTube feed. The interviews like this, we collect them every week and then send them out to that list so that they don't miss them, and they can view them or not. It's up to them, obviously. And discounts occasionally on certain items. Sometimes there's a chance to get a discount on something that's in the financial sector or whatever. So it's worth it. I write or do a video almost every week, kind of wrapping up what I see as the high points of the financial system, not just from a gold and silver perspective, but I usually end with some comment on gold and silver.
Very good. Well, it's great stuff, and you've certainly been a great help to many of our clients over the years in terms of the knowledge you've imparted and indeed education. So thanks again, David. Great having you on, and hope to talk to you soon.
All right, Mark. Good to see you again.
Take care. Bye-bye.
You're listening to the Goldnomics Podcast, with new episodes every month on iTunes, YouTube, and SoundCloud. Subscribe to stay informed.